Mr. George Alexander Muthoot, Managing Director of the Muthoot Group. Hi, very good morning, and firstly, congratulations on a great set of numbers. And let me start by asking that how much of the current growth is pure ticket size expansion due to the higher gold prices versus the volume growth in customers and transactions? What sort of a matrix and numbers are we looking in here?
Yeah, I think because of the gold price increase, etc., the average ticket size is going up. Probably if you look at 3 years back, the average ticket size is about 40,000 rupees. Today, the average ticket size is about 1 lakh plus. Probably 1 lakh 15,000 rupees is the average ticket size today. So people are able to borrow more on the same. And of course, we should also appreciate the fact that the economy is also growing. The people are also getting more prosperous. And what you could get for 40,000 rupees 4 years back probably may cost you much more. That is why people are borrowing more. The average ticket size is also going up.
All right. Well, George, hi, this is Kanishka also joining in. Just wanted to understand the perspective. What if gold prices fall, say, at 10%? We have sufficient LTV to absorb this kind of a risk?
Yeah, today, if you look at the gold price, if you look at today's gold price, if it is 100 rupees, the average loan to value on the gold outstanding today is less than 60% only. That means people who had taken money earlier, although the gold price has gone up, they have not borrowed it fully. So there are still headroom for that. And people borrow the money only if they want it and if they are able to repay. So just because the price has gone up, people doesn't just borrow the money, because finally they have to take back the gold by paying the principal and interest. So they wouldn't want to lose the gold. They borrow what they require. So today our average LTV or the LTV on the book is less than 60% only.
All right, but for now, the numbers look fantastic. But what happens to growth if the gold prices cool off? What's your sense there? Because yes, the gold prices are at an all-time high. There was a bit of a cool off. Then once again is seen to be inching up. But what sort of an impact can it make if the gold prices actually dip from such levels?
If the gold price comes down, we still have headroom. People will bring more gold. So today, if we bring 2 chains, you can get 1 lakh. After that, if the price is going down, instead of 2 chains, they have to bring 3 chains. Probably, since they want the money, they'll bring 3 chains. Since they can get the money with 2 chains, today they'll bring only 2 chains. It's as simple as that. If they want more money, they'll bring more gold.
All right, so that's in case the gold prices do fall off from here. But let's talk about some of your financials. Now, margins did see a significant uptick, and you have indicated further scope of reducing cost of funds. So how much would that be, if you could give us some details over there?
Yeah, in the last 2-3 months, 2-3 quarters, our borrowing rate, our cost of borrowing had been stable. But now in the last 1 month, etc., it has gradually started coming down because the banks have reduced their interest on Muthoot. So their 1-year lending rate to us has actually is coming down. So probably in the next 2 quarters, we should see the cost of borrowing coming down by about 20 to 30 bips. That's it. Maximum 20 to 30 bips.
All right, but now let's tell us.
I think it should be, you can take away about.
All right.
We should be in the range of 10.5 should be the continuous NIM which we should be able to get going forward also. That is what we were getting all through also, and we will continue to do that.
All right, but now help us have your view on are there any concerns on asset quality? Because we have talked about your guidance, we have talked about your business growth outlook, but asset quality, what's the sense there? Any risk factors, any concerns that you wish to flag off?
Today, at this gold price, there is nothing like asset quality, because if you look at our auctions also, last quarter we auctioned just 8 crores. This quarter we auctioned just 5 crores. In fact, maybe 5-10 years back, we would have auctioned about 300, 500 or 1,000 crores in a quarter. But now the auctions are so little because the price is so high. Nobody, they can just go and redeem the gold, and if they are not able to do it also, they can take it from us and go and sell it in the market also. So they get much better price. So nobody abandons gold today, and because the gold price is so high, they come either they take it back or they renew it either with Muthoot or with somebody else. So that is why there is no NPA. What you see as NPA is just people to who have requested us for some more time, maybe 2 months, 3 months, 4 months time, and we have granted them some time because we are in the money. If you look at the amount due from them, along with principal and interest, and the gold price, which is today's market price, if you auction it, it is much more. So then there is no point in disturbing him. If he wants some time, we give it. That is what you see as an NPA. None of these NPAs translate into a loan loss. No, in the last several decades, not one of these NPA accounts have become a loan loss.
All right, George. So that's about asset quality. But, let's talk about the outlook as well before we let you go. So tell us, can this growth momentum sustain through FY27 as well? And if so, what are going to be the key growth drivers for you?
So for the next year, we have now revised our guidelines. Earlier, we were saying a very low rate of growth as 15%. Now we have revised it from 15 to 30 to 35%, because in the first 6 months we have already grown by 21%, and we see good growth in these months also. Even after September also, we see good growth, and we see the continued momentum continuing in the next quarter also, because there's a lot of demand for gold loans today. Gold loans are in big demand, not only with NBFCs, even with banks. Everybody is having good demand for gold loan, and we see definitely a growth momentum. So that is why we have revised the guidance from 15%, which we used to say in the first quarter and second quarter. I had assured the media, the investors, that we will revise the guidance after Q2. So now we are revising it from 15% to 30 to 35% is what we see the market coming up.
All right, with this, Mr. Muthoot, we let you go. So good having you on the channel today, and all the very best for the upcoming earnings.